Hello, everyone, or should I say, buenas tardes. Thank you for tuning into this Your Overseas Home webinar on smart ways to protect or grow even your wealth when you move to Spain. I'm Richard Way from Your Overseas Home, and I'll be hosting this session. It's great to have you all with us, whether you're watching live or you're watching our recorded version, which is available through our on-demand webpage. So the aim of the session is to ensure that when you move to Spain, whether that's to retire, relocate with your family and maybe to work, or even if you're moving to Spain as a remote worker, it's to ensure that your money and your assets, all of your international wealth, are structured in the best and most tax efficient way for you and in accordance with cross-border regulation. So we're going to look at things like managing your pensions and savings, other investments you might have, consider options for Spanish compliant investment tools, and talk a bit about how residency or tax residency works. So clearly, cross-border financial planning is a complex subject. It's not something you want to get wrong, and getting specialist advice is a complete no-brainer. Which means I'm about ready to hand over, because I can't give you that advice, to our specialist speaker. And the person who will be providing us with all that valuable information in this session is Robin Thornton from international financial services provider Holborn Assets. Robin is an experienced wealth manager. He's based in Spain. His day-to-day work is helping expats, people like yourself if you're listening and planning to move abroad. Helping them with cross-border wealth management, asset protection, taxation, and I believe he can help you with golden visas, at least refer you to a colleague who can. So welcome, Robin. You can hear us all right?
Loud and clear, thank you very much, yeah.
Fantastic. We've got about 45 minutes for this session, and we're going to start with a presentation from Robin. We also want to get you involved if you're listening live or watching live, and we do welcome questions. So if you use the questions tool that you should see on your dashboard to type a question, and then I shall field it to Robin at an appropriate time. You might wait to the end of this presentation, or we'll wait to the end, just so he has time to do it all before we start answering them. Right, that's enough from me. Robin, over to you. The floor is yours.
Okay. Thank you very much for that very grand introduction. I hope I can deliver on the results, so to speak. So first and foremost, let's just run through a little bit who Holborn Assets are, Holborn Pass. So we are a global wealth management company. We've been in business now we're in our 26th year. Still British family owned as well. And as Richard said, a kind of cross-border financial advisory business. So we've got offices all over the place. Obviously including Europe, Africa, in terms of South Africa particularly, the Middle East, Asia, and across the other side of the pond as well. So we are an asset management and pension business, really. That's how we started, but of course with the kind of complexities of cross-border mobility over the last, perhaps the last 5 or 6 years particularly, that's changed now to span all kinds of different aspects in terms of your financial life. So our tag is right money, right place, right time. We look after about 20,000 clients and approximately $2.5 billion of money under our advice. And again, as Richard said, we have a kind of global mobility division as well. I work with them quite closely. And that's where we help people with golden visas to the likes of Portugal, Italy, Latvia. We used to do them for Spain, but that was closed down at the start of this year. Okay, so these are some of the things I'm going to run through today, and I've tried to, for those of you that perhaps joined previously, there'll be some repetition here because it's really important messages we're trying to get across. But I've also added in 1 or 2. Shall we say, amendments and updates on various bits and pieces as well. So let me crack on. First of all, let's talk about tax. Nobody particularly wants to pay it, although I've got a different view on that. I think the higher your amount of taxes that you're paying means that your income is substantially greater. So perhaps from a different point of view. So tax residency. If you are coming to Spain and you're on a traditional visa, that is dependent on your tax residency. So you have to stay more than 183 days in country anyway, unless you're on some kind of tourist visa or etc. Or if you're an EU national, for example, you don't have any ties in terms of the days, etc. There is another test as well, and this is really to stop people kind of floating around, shall we say, and that is whether you are or is the centre of your economic and cultural interest. So an example of that would perhaps be someone who's living in Portugal a little bit of the time, maybe a little bit in the UK, but their family are living in Spain and the kids are in school in Spain. Well, you're a tax resident of Spain, whether you stay 183 days here or not. And vice versa, going back to the UK, if this is predominantly a UK-centric webinar, there are various tests to make sure that you are, the statutory residence test, that you are a tax resident in one country or another. Okay, paying tax in the correct country, it comes up all the time. I've got to say, it's probably the most common mistake that people make. And some pretty simple things here are government pensions retain taxing rights in the country of origin. And an example of that would be like an army pension, a police pension, but not state pensions. State pensions are still taxed in Spain. And you can expect to pay slightly more tax than you would typically in the UK. And that's really down to personal allowances. So the personal allowance in the UK, 12,500 and something at the moment, which is reasonably high. In Spain, it's 6,000 euros, so approximately, well, less than half, isn't it, in terms of the personal allowance. Whereas the tax rates also in Spain tends to be more generous, or the tax take is slightly more competitive, shall we say, lower down. But then as you start earning more, it's pretty progressive. And of course, you've got two different types of tax regimes, particularly in Spain. So you've got the special tax regime, it's colloquially known as the Beckham law, where remitted income into Spain is only taxed at 24% for the first 5 years, and you don't have to declare overseas assets. It was started before, obviously, David Beckham, when he joined Madrid many years ago. It's now not applicable to sports stars, etc. It's more actually targeting entrepreneurs and business people. Or you've got your regular income tax regime as well. Okay, pensions, again, probably the favorite mistake people make. They see that they can take the 25% tax-free out of their SIP in the UK. Or if they're taking money out of a 401k or a Roth IRA in the States, and lo and behold, they get taxed as income in one big fell swoop in Spain. That can be a bit of a shock. Obviously, there are ways to smooth that out and still take benefits, but you should take PCLS, pension commencement lump sum, before you become a tax resident in Spain, if that's what you're planning to do. Pensions in Spain are not particularly attractive. It's really, I guess, a UK-centric thing where they're encouraging you to look after yourself, giving you lots of tax relief. Here in Spain, it's pretty low. Caveat as well is that you should check your national insurance contributions. Again, I've saved clients, I think my best client, I've saved him about 50 or 60,000 pounds. So you have opportunities because you're living offshore that you can pay, for example, class 2 contributions, which is only £165 a year to top up those missing years, and you can buy back from 2019 at the moment. So they've reduced the kind of window of opportunity, shall we say. A little bit about other bits and pieces. So the kind of common, I guess, platforms, tax efficient wrappers are all taxable in Spain under saving tax rates, which is basically the capital gains rates from 19 to 30% on an annual basis. And it includes things like, ISAs, premium bonds, stocks and shares. I mean, even the winnings on your lottery. So, if you win the big lottery at Christmas and win 100 million, I think you're going to have to pay about 30 million back to the government, which must be very, very painful. Although I would like the 70 million on the other side. That'd be very nice. And there are options, again, as Richard said at the beginning, to use Spanish compliant investment bonds to defer some of those taxes and make the ride a little bit smoother. And I'll come on to that in a second. And this one pops up a lot of the time as well. Client says to me, look, I've got a business in the UK. I take a dividend every year because we all know it's quite tax efficient to do that. However, dividends are taxed as income in Spain. So that can be a bit of a shock. Little table there just explains those saving rates. For 6,000 euros at 19%. So there is no personal allowance. Again, like the UK, and your capital gains tax in the UK, you've got a personal allowance of, I think it's £12,000 before you pay anything on an annual basis. So there's none of that here. Interestingly, if you're a non-resident, so if you're a non-tax resident, you just pay a flat rate of 19%. Okay, so what's a Spanish compliant investment bond? It's taxed as an insurance product, so you don't have to file a Modelo 720. It's designed to be held to 5 to 25 years. You can set it up to provide monthly income to perhaps top up your pensions. Tax is only paid on withdrawal, so that kind of slice that you take out, you pay the tax that's due on that. And the provider pays the majority of that direct to the hacienda, so they will pay 19% to the hacienda. So you don't have to deal with those kind of levels. If the gain's more than that, you will still have to fill what's called the Modelo 100, which is your annual tax return, and then you'll pay the difference in the tax. Global investments, global providers, etc. And the minimums on those start at about 50,000 euros. Other options, lots of talk about Spanish compliant bonds all the time. I always think there's a good alternative. Our platforms, I do a lot of work with that with my clients. It's a bit more administrative because you have to file your profit and loss for the whole year. You just say, okay, I started January 1st with this. I've ended 31st of December with that. Here's my valuations, and you pay the tax to the hacienda yourself. But people like Novia, Arden, Morningstar provide those platforms, as they do in the UK as well, and globally. You can invest in anything. You've got, obviously actives and passives in terms of funds, ETFs, mutual funds, pretty much anything you want. Okay, a little bit here about taxes in Spain generally, and I guess if you're on this webinar, you've done a little bit of research, but I think it's always good just to add one or two bits and pieces in there and confirm them. So we've got wealth tax, we've got solidarity tax, and they're both region specific. So a little bit of history, shall we say. There used to be the wealth tax throughout the autonomous regions, particularly in Andalusia, where I am. The government did some research and looked at the people that were paying wealth tax 1 year and how many of them were left the next year. And surprise, surprise, it was about 50% had left already. So therefore the tax take was dropping massively. So they decided to ditch it. The federal government said, hey, you're not doing that. You can't do that. So we'll bring in the solidarity tax, but they raised the minimum right up to 3 million per person for the solidarity tax. Whereas some regions still have the wealth tax, which is at 700,000 per person, with an allowance for your residence as well. You've got your Modelo 720 reporting, so you've got any assets in total that are overseas. You might have an English bank account, you might keep the ISA in the UK, I don't know, bits and pieces. You have to report those on that Modelo 720. There's no punitive fines anymore for doing that because a number of people took the Spanish government to the European Court and won, but you still have to declare it. And of course, you would have to pay any associated taxes on top of that as well. Usual things like, your The UK, US, you've got property taxes, local, local and region specific, not massive. I was just chatting to Richard before we started about kind of property taxes and council tax in the UK and versus a Spanish version. My EB, as we call it, is about €500 a year. I think probably the average council tax in the UK is probably about 1,500 or even more a year. Road tax in Spain, 40-50 euros a year. Road tax in the UK, is it 150, 200? I saw something the other day that if you've got a big Range Rover or whatever in the first year, you could end up paying thousands. Yeah, that's a big difference. Obviously, we've got sales tax, EVA, 21%, but there are exclusions for different products and different services, like your usual things like baby food and medical care, and etc. So what's happened this year in terms of kind of changes? Again, we were just chatting earlier, but EVA has gone back onto our electricity and gas bills. It made a pretty substantial difference because it's gone up from 4%, which they brought in kind of post-COVID, because of the crisis, the energy crisis. That's gone back up to 21%. And also, we've just been hit with a new blackout tax. So since the blackout, the power generator, which is Red Electrica, are switching to, they've called it more sustainable power generation. So I'm not sure whether that means less technology and turbines, but basically they're going to be burning more biofuels and kind of types of energy like that, which I guess gives a sustainable flow of energy. Whether it gets to us or not is a different matter. But that's added about 30 or 40 euros per household on a monthly bill as well. We've got a new tax bracket for savings income, capital gains income of 30%, so above 300,000. Those people that are looking up to making substantial gains, you would be paying 30% above the 300,000 bracket. It is progressive though, so the kind of nominal rate for that would be about 26-28%. Spain's doing well. GDP growth in 2024 was exceptionally good, highest in the Eurozone, and it continues to be that way. The positive news is very good in terms of the economy. Obviously, there's some headwinds with tariffs and what's happening with Mr. Trump, and also on the hospitality sector. We are starting to see, and this is anecdotal, but we're starting to see a slowdown in those kind of sectors. And generally people are looking at other options to for the holidays, like I guess Croatia and those types of places, which are perhaps are not so crowded and are more welcoming. Employment's rising and residents are rising. So residency is going up by about 600,000 a year, and then employed people at 21 million a year as well, which is good. This is something that comes from my upbringing, I guess. I was born in Yorkshire, so my mum and dad used to talk about, looking after the pennies, and the pounds will look after themselves. But just a couple of things here to spark an idea. A couple of my friends who I've known for 5-6 years still have their UK mobile number. No idea why. And they're paying 30-40 quid a year, whatever, a month, whatever it is. Mobile providers like Lobster, I pay 12 euros, get as much data as I want. I can call America for free and call the UK for free. I can call my American clients on their mobile for free. So those kind of things. Smart currency, obviously, your overseas home, smart currency, they can set up, for example, regular foreign currency payments if you're getting your UK pension. Obviously, you don't want to be doing that transaction through your bank. It'll cost you probably 2 or 3% extra every single time, and they can provide obviously longer term rates as well by hedging that currency risk out. Another one, again from personal experience, a friend of mine got a €4,000 bill for parking fines and speeding fines. Well, it did go back 6 years, but he'd never updated his address, so he didn't know about it until his bank account was embargoed. And another big money saver really is life insurance. So life insurance through a bank. So if somebody takes out a mortgage here, you're forced to take the bank's insurance for the first year only. Most people let it run on, but it goes up and up and up in terms of cost, and that's because of the risk. Whereas international policies, UK policies, ones that we can help with, are on a fixed term basis. So that can lead to substantial savings. And I've put here subscriptions. It's a silly thing, isn't it? But you know, in terms of that, are you going to be using those in Spain? Do you need X, Y, and Z subscription? They've almost become like another utility. Okay, some do's of your move. Talk there about smart currency. Obviously, check that out with those guys, how they can help. Book a meeting with ourselves 3 to 6 months before you move, or any regulated professional company that's got the right advice permissions to get that specific planning advice. If you're going to sell your property in the UK, sell it before becoming a tax resident, because there is no main residence tax exemption in Spain, and that will save you on the capital gains tax on that. And again, look at specific circumstances for some of those different types of products that you might have or you've accumulated over the years, of what is the best practice to do them. You don't have to, for example, liquidate your ISA in the UK, but you will have to declare it to the Spanish authorities. So there is, there's kind of pros and cons to those types of things. And again, just to mention there about your pensions, take some advice, particularly on that, particularly around the PCLS. Maybe an obvious one, but you'd be surprised how many people don't do it. Tell your institutions your new address, your contact details, where you're going to be. Confirm things like life. If you write to your life policy company and tell them that you're moving to Spain, here's my new address, please confirm I'm still covered. That's it, job done. You don't want to be worrying about whether you're still covered in Spain. 99.9% of the time you will be, and you should be. Update your will. Obviously let HMRC know that you're going. It's called notice of leaving. Goodbye. We're off to the sun. And when you get here, make sure that you update your will in Spain. Great system in Spain. All wills are held digitally and centrally. So there's no back of a fag packet. There's no envelopes with, was it solicitor in Wigan or Barnsley or Leeds? I can't remember who's got your will. Or did I give it to my sister, or was it my brother, or did we leave it with cousin Frank? I don't know, whatever. So in Spain, it's all held digitally. You can update it at the notary, and any lawyer with the right permissions can access that. One other thing to consider as well, you might be coming to Spain to live, become a tax resident here, but you might still have UK inheritance tax liability. A lot of people forget about that, and again, that's what we can help with. So assets and because they're basically the way that the legislation has changed, it's going to be residence based in the future, but there is a time corridor, shall we say, of when you are no longer subject to those inheritance tax. You would of course then be subject to Spanish inheritance tax, but again, it depends in what region. Again, Andalusia, they just did away with it. You get a 99.99% allowance on your inheritance tax. And again, that's to attract people to live, work and retire in the region. So it's good for, it's very pro-business. Okay, I rattled through that in 24 minutes. I think that's pretty good. For those of you that are tech savvy, QR code on the screen there, which you can scan with your smartphone. My email ID is there as well, robin.thornton@holbornassets.com. Our WhatsApp number, obviously here in Spain, if you want to drop me a message, any of those will work for me. And effectively what we offer is a 30-minute free consultation to see if we can help you. And sometimes if we can't, sometimes they'll just turn around to people and say, actually, you don't need an advisory, you could do this and you can do that, or I perhaps might refer you to a specialist if it's a complicated case. Richard, can I have some really nice, easy questions, please?
I can't control that. Well, I can filter that. We have had some questions. They're all good questions. Just before we get to those, I just want to quickly run through the process of your service and how it works. So you said, so someone's listened today, they want to engage you. So what happens next? They contact you via your contact information, and you said you'll arrange a 30-minute.
Yeah, so it's very much a very informal process to start with. Don't get me wrong, it gets very formal after that, but the informal side of it is a free 30-minute meeting, and I will run through and answer any questions that I'm able to do so, or refer, like I say, I've had recently a few clients say, can you help me with application for a visa? No, I can't, but I know a really good lawyer down the road that can, and that's where I refer clients to. So once we do that meeting, and we chat through, well, that's when if the client wants to engage with us, and that's when we'll start finding out some more information, because we are a regulated financial services company, so we need to get a full picture of the client's situation, and that's on what's called the fact find. Get that back, I sense check it, make sure it makes sense, and that's when we'll put together a recommendation for the client, again in writing, before anything further. That's just a recommendation. The client doesn't need to to take that recommendation. It's entirely up to them. Obviously after that, if they want to come on board with us, there's various bits and pieces of paperwork to complete.
And what are the main, or the core things that you help people with? Is it, I'm thinking pensions probably, is it? And
yeah, the biggest things, well, in kind of order, are general questions. What can I do about this, or is that, I've read this on the internet, is that correct? Because there's a lot of like all things, there's a lot of misinformation. Secondly, it's usually investing for income. So clients might have an ISA in the UK with, I don't know, £100,000 in it. I want a simple route. I'm a conservative investor, so then we'd look at things like the Spanish compliant bond for that, with something like the Prudential, and then help with pensions. Most of the pension related questions nowadays don't usually end up with me providing advice not to do anything, or to just do a simple switch of what we call the agency, so we can manage it for you, because that keeps costs down. It's not always the right thing just to kind of cashing one policy there and open another one somewhere else. So we take that on a very bespoke basis, and I'll provide that advice on to those individuals.
Okay, thanks. And the other thing, I know you've mentioned this before, is people should be aware of who is actually qualified to give financial advice now, that if you're in the UK, which is no longer in Europe, there's a distinction, isn't there? You can't get advice in Europe.
Yeah, a good example is you might have a financial advisor in the UK, and don't get me wrong, it works the other way around as well. I refer people back when they move to the UK, but a typical financial advisory company based in the UK, regulated by the FCA, will not have permissions to provide that advice to a non-resident of the UK, and that's just the way the law works. Some might, don't get me wrong, if they've got an offshore branch in Europe, for example, and they've got a MiFID II license. And it's a bit like some of the banks, many years ago we heard about them closing people's accounts and causing problems in that respect. It's exactly the same kind of theory. So what we do, because we've got a MiFID II license here in Europe, is we can provide that investment advice and the general financial planning that sits around that. But likewise, I cannot advise a UK resident, about their, pension or the ISAs or anything else, because we're not regulated to do that.
Okay. We've got quite a few questions, but there's one here that is relevant to the service that you offer, and it's simply, what are the costs, or how do you charge your fees?
Yeah, good question. And it really depends on what type of advice is, not the advice, but what type of solution. So we're very clear and transparent. We put everything in writing in terms of what we're paid. Typically things like life insurance and some of the Spanish compliant bonds, the provider pays Holborn a commission. So commissions are still quite prevalent in Europe. So for example, if a life insurance premium was €100 a month, my company would probably get 10-15 euros a month from that client. If it's lump sum investing, again, it's always down to the individuals. If a client comes to me with a couple of million euros, well, we'll talk seriously and we'll negotiate that right down in terms of costs. But typically it's around about 3% if someone's coming on a lump sum basis, and that's really to get everything set up and do all the due diligence and everything else with the providers. We really earn our income on the long term. So, my clients have been with, or I've got a lot of clients that have been with me kind of, 15 years or so. And we charge a regular annual management fee. And that's typically anything between half and a maximum of 1%. So the lower values of investments are at 1%, and then obviously the more you invest, the cheaper it becomes.
Okay, and presumably with all today's technology and FaceTime and that, you can talk to your clients fairly easily over social media or,
absolutely
email.
Everything. Yeah, I mean, I'm in a funny situation. I've been working remotely since way before COVID and way before it was the kind of normal, shall we say, the new normal. So yeah, I'm going to say 98% of my clients and businesses all done over Zoom or Teams or whatever the platform is. I have a few relatively local clients which I like to go and see. One in Cadiz, which is a couple of hours drive, and same north of Malaga as well. This is for me, but the majority is all done over. Our app, for example, our Holborn app is really good with that. We have quite a sophisticated process now for identification, for example, where people would basically effectively scan their own face to match their passports. So all that kind of technology stuff that's going on behind the scenes is getting better all the time. But there is still a bit of paperwork and stuff involved with some clients, but it's done digitally. So we're pinging things off and using Adobe DocuSign or similar. So it's generally paperless. I'd like to say completely paperless, but we're not. I don't think we're there yet, because some of the providers and institutions have been around for 200 years. The Prudential's been at it for I think 200 years, so they're a little bit conservative, shall we say.
Back in their ways. Yeah. It explains why you're such a natural in front of the camera on these webinars, if you've been doing it so long.
Do I look that old already?
No. Okay, we've got a question here from Suzanne. She's asking about moving funds. She's mentioned from a UK ISA to, for example, Spanish investment bonds. When do you actually need to do this? She said, do you need to be resident in Spain to do it, or do you actually make the transfer while you're still Spain?
No, you need to be you need to have a proof of address in Spain and a NIE number. So it's generally when people are kind of settled or have moved here on a more permanent basis, and that's generally for providers.
would you be a tax resident at that time as well? I mean, when do you actually become a tax resident? You move to Spain, so you've got your visa and you've got your legal residence. Yeah.
So, Richard, were you watching the first part of this webinar? Were you actually paying attention?
I was trying, but
so, well, actually, it's a bloody good question in the nicest possible way, because your tax residency only technically starts after 183 days, so more than 6 months. However, your visa is granted on the basis of permanent residency. So there's a little bit of, how should we say, ambiguity there, but the golden rule is 6 months after you arrive in the country. So effectively, you might be granted, like, for example, a nomad visa, the non-working visa, the retired visa for Spain. You then move here. Well, actually, you've got to be here before you can apply for it. It's a bit of a, what's the word, oxymoron, where you've got to have a proof of address to then apply for it. It's a bit like Portugal as well. It's very similar. So there's a little bit of ambiguity there, legal side, but generally speaking, it doesn't really affect anybody. But for any form of investment or business that we would interact with, you would have to have a proof of address in Spain.
Okay. Another question about ISAs from Steve. If you kept an ISA in the UK, do you have to declare it on your Modelo 720? And then do you have to pay tax on any gains in Spain?
You do. So if Steve's got more than 50,000 euros, so that's what, about 42,000, 43,000 pounds in assets held offshore, and by offshore we mean outside of Spain, you would have to declare them all on your Modelo 720. Now, all of them would be subject to the savings tax gains. So you would complete what's called your Modelo 100, which is like your annual tax return, and you would declare on those your gains. And usually the institutions would provide you with a tax certificate. Now, of course, the ISAs don't, because they're not taxable. So the answer to both of those is yes, if the asset is greater than, or the assets are greater than 50,000 euros.
Okay, thank you. A question here. I'm hoping you know what this is referring to. Graham asks, one of your slides referenced DGT, Delta Golf Tango. What does that mean?
Oh, sorry. Yeah, good question. DGT,
Yes.
it's the Spanish, it's basically, it's the road traffic agency in Spain. I can't remember what it's called in Spanish. It's a really good question. So it's like the DVLA in the UK. So it's basically where you get your fines and various bits and pieces from. You know, I've got an app on my phone that pings if I. Actually, I'm a good boy. I've got more point. Again, a bit of a anecdotal list, but when you transfer your license to Spain, because you have to do that as a Spanish resident, you get points straight away, but you get positive points. So like in the UK, you get like black points or whatever they're called. Here you get positive points. They give you 12 points. So if you get any kind of fines or infringements, they take them off you until you get down to 0. Although if you're a good driver and you don't incur any traffic violations, every now and again they give you an extra point. So I'm up to 14 points now.
Oh, you get bonus points. Wow.
You get bonus points. You look at the app, but the problem is when you first move here, you look at the app and you go, oh my God, you know, because you're thinking, you know, back in the UK.
Yeah.
But no, it works the other way around.
Sorry,
Sorry, it's a good question.
Yeah.
DGT.
Yeah.
I can't remember. Directive Trafico something general. Yeah.
Don't ignore it if you get one of the posts, something in the post from them. That's the important thing. Another one here, you mentioned something about over 65s. Again, one of the slides. Are they exempt from any tax What was the reference?
Sorry, that is a good point, which I've rattled through. So if you're buying a property in Spain, which I guess all your clients, for example, are looking at or doing, there is no main residence exemption on capital gains for property in Spain. So when you sell it, you're going to have a tax bill. But if you're over the age of 65, there is no tax to pay on selling your property. The caveat to that is you need to be a tax resident in that year of disposal. So, for example, if you're 65 in January of, say you were 65 in January this year, and you then sell your property in March or April, that gain will be zero. There'll be no tax to pay. Whatever gain there is, there's no tax to pay, as long as you are a tax resident for that full complete year. So you would then perhaps leave Spain thereafter or later on in the year, but retain your tax residency for that year. So that's it's a big plus when you come to looking at financial planning and how best to structure the purchase of your property as well. So again, individual circumstances, but perhaps if you've got a partner who's older than you, it might make more sense to put that property in just in their sole names, although that can have other potential consequences dependent on the value of the property, because that might increase the tax on the purchase. Again, depends on individual circumstances. And of course, you need to make sure you've got a will in place that protects that single owner of that asset. So it's a little bit of a complicated area, but basically after the age of 65, yeah, no tax to pay. So it's can be a pretty substantial saving for a lot of people.
And just so I'm thinking along the right lines, in that instance that you mentioned, if you didn't leave Spain until, say, August this year, sorry, if you left Spain before the end of June, you wouldn't be Spanish tax resident for this year, or would you still be? Because you wouldn't be able to do 183 days.
Exactly. Yeah, it's worth it's worth declaring your. I mean, quite frankly, you could have left Spain in August, September, whatever it is, and be living in another country. And as long as you declare that you're a tax resident for the rest of the year in Spain, for me, if I was drawing a pension or whatever, I'd just pay a little bit of tax to make sure the hacienda's happy, because guess what, the 300,000 of gain that I've made on a property is now tax-free, and that's going to be substantially more than paying a little bit of tax for the for the remainder of the year. But yeah, you're absolutely right, as long as you are tax resident in Spain in that year.
Okay. Another question here, ISAs again, popular topic. You might have answered this, but already in a previous question. He said yes, he believes you can keep them, but you can't add to them once you're a Spanish resident. And once your current ISA deal, if you're on a fixed term deal with your ISA ends, and you're by then living in Spain, you can take a new deal, ISA deal with existing funds, or will you just end up on a low basis interest rate? So what happens? Can you, first of all, the first question is, can you add to an ISA once you've left the UK and you're living in Spain? And what happens when the deal, if it's on a set term, what happens to the ISA after that?
Yeah, well, again, I'd have to revert you to a UK regulated financial planner, but in general terms, I don't think there's anything stopping you adding to an ISA, because you're an ISA is not like a pension where you're getting tax relief. All it's doing is growing in a tax efficient manner, and the withdrawals are tax efficient as well, or they're tax free. So it's worth checking with your individual provider in that respect. And the second part of the question was Could you?
Can you take up a new ISA product if you're on a fixed term product, ISA product?
Yeah.
So yeah, I don't know. And once that term ends, you would revert to, I guess, a standard rate, depending on the product.
Again,
another ISA product.
Again, you'd have to talk to your individual provider. If they ask for updated proof of address and you don't have it, you're snookered, because for sure there'll be a big fat no if they see a Spanish address, etc. But I kind of question why somebody would do that, really. If it sounds like it's a cash ISA when you're on a fixed term, 3 or 4% or whatever the number is. Similar things are kind of available in Europe, but in more of a tax protected way. So, and again, I think we're all like this. Is we like to, and we're familiar with UK, I guess, products and services, and we kind of want to hold on to them. But there are usually alternatives out there which are just, if not better.
Yeah, you need to open up your horizons to different products once you leave the UK, and I guess, and be aware of this.
Yeah. I mean, there are some very good, don't get me wrong, I think some of the incentives for savings and pensions in the UK are second to none. I've seen, I deal with clients all over the world, and it's probably one of the best places to accumulate wealth. It's perhaps not the best place to spend it.
Okay. I think you've answered this. Well, I know you have, but just to recap, Mike asks, what time does someone become liable for tax in Spain? Is there a time period where it's?
Yeah, again, it's that 183 days, which is the same of any country in the world. If you're fortunate to have a property or a place, for example, in Dubai, you would want to spend more than 183 days there, because then you could come and live at your place in Spain and still be a tax resident in Dubai. So wherever you spend 6 months of the year, or is the center of your cultural and economic interest. So that's when it starts to get a bit complicated. But if people are moving around and, I've got a house here, or I've got an apartment there, and, might not own it, might rent it, but I don't pay tax in Portugal, I don't pay tax in Spain. I've had these questions with clients. So where is your tax residency? Oh, I don't have one. You do. We all have one. Everybody on the planet has one. It's just whether, you're doing the right thing, shall we say.
Okay. And for people, this is a question from Tanya, but might be applicable to a lot of people. If you're already living in Spain and you're a Spanish resident, can you still help people, or is it just at the point of making the move? But you said you got promoted for 15 years. So I guess once.
Yeah, I'm talking to people all the time, on a personal basis when it comes to thinking of a move. A lot of your clients are thinking about a move. They're looking at a property. They are thinking about, moving to Spain or Portugal, or any kind of perhaps warmer, nicer, cheaper country. So all those conversations usually start. I've had some conversations like, clients, prospective clients said to me, I'm thinking of moving in 2 years. I mean, I can give you some general background, but in 2 years' time, everything will have changed a little bit, hopefully not too much. So I can always engage with people, but I can't give you regulated financial planning advice that we can act upon until you have a proof of address in Spain.
Okay. Right. That is it. We've got one more question. I know you've answered this. First 25% of a pension lump sum is tax free. So in Spain, we have to pay tax on that. So if you said this right at the start, take that before you move to Spain. Yeah.
So it's only tax free if you are a UK resident. And again, that's not always on the perhaps literature. Example, you've got £100,000 in your SIP. You're over the age of 55. you can take 25,000 out straight away as a tax-free lump sum, as a PCLS, pension commencement lump sum. If you did that as a Spanish resident, that 25,000 would be taxed immediately as income. So it would be on the tax progressive scale, and you would be paying 20%, 26, well, probably about 26% tax on that 25,000.
Okay, and on that valuable nugget, we are going to have to wrap things up. We've done over 45 minutes. Brilliant. Well done, Robin. And thank you everyone for watching, whether you're watching live or you're watching a recorded version. If you think anyone else might find this useful, send them the link as well. Thank you very much, Robin. Really appreciate you giving your time to speak to us and share all that valuable information. We can tell you're enjoying life in Spain as well, making us want to make the move even more. And enjoy your evening. Small request from us here at Your Overseas Home: if you found this useful and you're feeling a bit generous, we'd appreciate it if you left us a review on the review website Trustpilot, and there's a link to it there on your screen now. And I also have a save the date for you, which is the 4th of October, which is when we're doing our Your Overseas Homes virtual event. It's a comprehensive event, so we're not just talking about Spain, we're talking about all the popular countries that you might want to move to or own a second home in, and it's your chance to meet people like Robin, as well as estate agents, lawyers, smart currency exchange, removal companies, anyone you might need to buy a home or move abroad. It's a virtual event, but in real time, so you can sit on your sofa at home, log in via your laptop, and actually speak to people like Robin in real time, and then make plans and fix appointments and go out and look at properties afterwards. So there's a link for that to register for that as well on your screen now. That's free. And that's it from me for now, and from Robin. Good luck with your plans for Spain. Thanks for watching, and thank you, Robin. See you next time.
Thank you very much. Good evening.